Hey there folks, today we've got to share some insights about Bitcoin that have been keeping us up at night. Now sure, the price might not be taking a nosedive this week, but don't let that lull you into a false sense of security. What we stumbled upon recently about Bitcoin's future price is downright unsettling, and we believe it's something everyone needs to be aware of. Before we dive into the details, we want to make it clear that this isn't some baseless fear-mongering. Truth be told, we were on the fence about making this video, but then we saw a respected crypto and finance expert, someone the whole world looks up to, discussing the same concerns. That made it impossible for us to stay silent, and here we are. So what's the deal? We're talking about a potential crash in Bitcoin's price. Yeah, it's not a cheerful topic, but it's crucial to face the reality. Many aren't even considering the factors we're about to discuss, and that's why it's vital to get the word out. Do me a favor, share this video with anyone who needs a reality check about the current state of Bitcoin. Now let's delve into the charts for a moment. There are two key points to understand. First off, look at the pattern before the Bitcoin halving, which, as of now, is projected for mid-April. History tells us that significant shifts tend to happen in the lead-up to this event. Secondly, and this is where many people miss the mark, this isn't a sudden crash we're talking about. It's more likely to be a gradual process, a rollercoaster ride of ups and downs. Now, check out this chart. Picture this, a dip below $40,000, a swift recovery back above it. Then, just when you think the worst is over, a plunge to $35,000, a momentary panic. But hey, we're back at $40K again, and we're on the verge of breaking through. Except, hold on, we're going back down to $30,000. The roller coaster continues, dipping just below $30,000, and just when despair sets in, Bitcoin bounces back up. You see, it's a series of waves, not an abrupt crash. It's the kind of scenario that messes with your emotions, plays mind games with even the seasoned investors. And when the market starts echoing doom and gloom, with predictions of Bitcoin dropping to $10,000, that's the very moment it springs back up. Now the thing about this is, this pattern is not new. It's happened before, it might happen again. The looming Bitcoin halving adds an extra layer of uncertainty to the mix. Will we witness a significant pump around that time, or will the market continue its unpredictable dance? Now let's dive deeper into the intricacies of what's brewing in the world of Bitcoin. First things first, we want to clarify that what we're discussing isn't a crystal clear prediction of the future. There are countless scenarios that can unfold, but we feel it's crucial to outline the potential trends we might witness. Now let's shift gears a bit. The first red flag that caught our attention in the Bitcoin landscape was the overwhelming optimism surrounding the upcoming halving. A recent study polling nearly 10,000 cryptocurrency investors revealed that a staggering 84% are expecting new all-time highs post-halving. Now that's set for April this year. Now on the surface this might not ring any alarm bells, especially if you're as bullish as we are, and probably as you are as well. However, let's rewind a bit. Historically, the sentiment around the halving isn't usually this optimistic at this stage. There's often skepticism, doubt, and debates about whether this event is already priced into the market. It's an interesting shift to witness a global consensus leaning heavily towards bullish expectations. Regions like East Asia, Southeast Asia, Western Europe, Latin America, everyone seems to be singing the same tune of reaching new highs. Now let's shift our focus to the technical side of things. If you find yourself nodding along or learning something new, go ahead and give that like button a gentle tap. It's the small things that make a difference. Now, from a technical standpoint, there's more to uncover. The narrative and sentiment might be bullish, but what do the charts tell us? We're not going to throw a bunch of complex indicators at you, but let's consider the bigger picture. Now let's talk about Fibonacci retraces and how they're playing out in the ever-volatile landscape of Bitcoin. Now we know this might sound a bit technical, but let's break it down together. If you've been keeping an eye on the cycles, you'll notice that Fibonacci retraces seem to have an uncanny connection with Bitcoin's journey. It's like a dance, a well-choreographed routine that repeats itself cycle after cycle. The recent mid-cycle top for Bitcoin landed precisely at the 0.618 Fibonacci retrace level, hanging around the $48,000 mark. Now this spot right here has been a familiar pit stop in the past cycles. The dip follows suit and it echoes the same rhythm we've seen in the previous cycles. So what's the significance of all this Fibonacci talk? Well, historically, the mid-cycle top tends to align with the 618 Fibonacci level, signaling a temporary pause or correction in Bitcoin's upward trajectory. Now, assuming we lend credence to this pattern, the next checkpoint on the Fibonacci scale is the orange 382, and it's currently priced at $35,500. Now here's where it gets interesting. Every other cycle, Bitcoin has gracefully touched this orange 382 point. It's like a well-worn path that the cryptocurrency seems destined to tread. So, if history is any indication, a dip to the low $30,000 range in the coming months, think February through March, seems quite plausible before the price gears up for the next leg of its journey. Now, we weren't originally planning on getting into all of this Fibonacci intricacy, but something significant has caught our attention. A heavyweight in the crypto and finance realm, Chris Burnisk, is sounding the alarm. He's not mincing words. He believes Bitcoin is in for a hard crash, possibly dropping as low as $25,000. Now, why are we sharing this? Now, it's not about spreading fear, but when someone of Chris Burnisk's caliber steps up and puts their reputation on the line, it's worth paying attention. He's citing various variables, from crypto market specifics to macro trends, adoption rates, and new product developments, as factors contributing to this bearish outlook. This is where it gets real, folks. It's not just about charts and patterns, it's about understanding the underlying dynamics that could shape Bitcoin's future. What's your take on this? Do you think we're in for a dip below $30,000, or is this just another twist in the crypto roller coaster? Drop your thoughts in the comments because we're genuinely curious to hear your perspectives. Now, for those who have been brushing off the signs, it's time to sober up from the party we've been having. We've witnessed quite a bit of exuberance in the past months, but it seems like it's time for a reality check, at least in our humble opinion. Here's the forecast. We think Bitcoin might take a dip, possibly down to the range of $30,000 to $36,000 before finding its local bottom. And you know what wouldn't shock us? If we test the mid to high 20s before this wild ride settles down. Now, we're not trying to be the bearer of bad news, but rather a pragmatic voice in this crypto carnival. Navigating this path won't be a walk in the park. Expect fake-outs, twists, and turns. Patience is the key here, always your friend in the crypto realm. Now, if our instincts are on point, other crypto names might experience a more significant drop in percentage terms than Bitcoin. Let me be clear, this isn't a task we take on for the sake of clout. It's far from it. Making these calls is often a thankless job, especially for someone not obsessed with the limelight. Now, if we happen to be wrong, well, that won't bother us, but we're holding on to our long-term cycle perspective. Now, before you direct your frustration our way, remember, we are not alone in this line of thinking. Chris Burnisk, a reputable figure in the crypto space, has been singing a similar tune. He called the cycle bottom in November 2022 and believes in the robustness of the long-term trend. Sure, we've been witnessing the ebb and flow of crypto volatility for over a decade, and lately, we've been specifically honing in on local tops and lows and not a broad cycle prediction. However, it's hard to ignore the fact that we've just witnessed some of the first parabolas of this cycle, and now they're showing signs of breaking. The macro outlook seems a bit shaky on various fronts, and while the new product innovations are on the horizon, they're not quite there yet. Things still feel a bit insular. Now, we're not saying this to create panic, but rather to prompt reflection. Are you ready for the potential turbulence ahead? Can you handle another Bitcoin crash if it comes our way? These are the questions we all need to ponder. Now, if you decide to stick around in the crypto game over the next 2 to 3 months, we believe it could be very rewarding. That's our take, at least. If you resonate with this perspective, or if it's got you thinking, consider subscribing to the channel. We drop a video almost every day to keep you in the loop. Alright, cryptonauts, keep your eyes peeled, stay informed, and we'll catch you tomorrow. Have a good one.